Imagine you're looking at a perfectly built house. Before you admire the windows, the roof, or the fancy front door, you first need to trust the foundation. In trading, that foundation is called the base of structure. Master this concept and you'll understand why market moves begin, pause, or suddenly reverse, and how to position yourself ahead of the crowd. What structure really means. Market structure is the sequence of higher highs, higher lows in an uptrend, or lower lows, lower highs in a downtrend. It's the technical skeleton of price action. The base of that structure is the level, or tight price zone, where momentum paused long enough for buy-side and sell-side orders to rebalance before the next impulse leg. Why the base of structure matters. Think of the base as the negotiation table. Banks, hedge funds, and large prop desks quietly accumulate or distribute positions here. When price returns to this zone later, it often reacts sharply because unfilled orders still sit in that footprint. Spotting the base early lets you place entries with tighter stops and higher reward to risk profiles. The 3 visual signatures. Compression candles, several small-bodied candles with long wicks. Volume contraction, tick volume or real volume fades, signaling equilibrium. Mid-range equilibrium line, a horizontal line you can draw through multiple candle closes. When at least 2 of these signatures align, you've likely found a valid base. Time frame alignment. Always start top down. On the daily, mark major bases. On the 4-hour, fine-tune them. On the 15-minute, time your entry. If a base lines up on multiple time frames, expect stronger reactions because more participants are watching it. Supply and demand inside the base. Inside every base, a micro battle plays out between supply and demand. If demand outweighs supply, you'll later see an impulsive bullish break. If supply overpowers demand, the break is bearish. Spot order block footprints, large engulfing candles, and note which side truly dominated before the pause. Break of structure versus base of structure. A break of structure, boss confirms trend continuation when price closes beyond a previous swing high or low. The base of structure is the origin prior to that boss. Knowing the base helps you predict where a corrective pullback might end, often right back at the base before the next boss fires. Trading strategy number 1, breakout entry. Mark the upper and lower limits of the base. Wait for a full body candle to close outside. Enter on the close or first micro pullback. Stop loss goes just inside the opposite side of the base. First target equals the height of the base projected forward, trail for runners. Trading strategy number 2, retest entry. After the breakout, set an alert at the outer edge of the base. When price retests, look for a rejection wick or bullish, bearish engulfing candle. Enter with half risk on the wick touch, add the other half on confirmation. As stops sit a few pips beyond the far edge of the base, targets follow structure highs or lows. Risk management and psychology. Bases can fail, especially during high-impact news. Risk only 1% per trade and avoid piling on positions if you feel FOMO. Remember, missing a trade is a paper loss. Revenge trading a false break can blow your account. Real chart example. Open Euro USD 4-hour. Note the July 3rd 5th consolidation around 1.00800, compression candles, shrinking ATR, and a steady VWAP. Price later rockets 120 pips. When it revisits 1.0800 2 weeks later, a bullish pin bar provides a textbook retest entry that delivers another 100 pip move, proof of the base's hidden liquidity. Common mistakes for trader. Marking every sideways pause. Not all boxes are true bases. Focus on those with clear volume drop-offs. Ignoring wider context, a base against the higher time frame trend fails more often. Placing stops inside the base. Market makers love to sweep shallow stops. Give it breathing room. Mastering the base of structure turns noise into a roadmap. Next time you chart a pair, ask where did the last strong move start? Draw that zone, plan your entries, and watch how price respects it. If you found value in this lesson, smash the like button, subscribe to Financial Freedom FX, and ring the bell so you never miss a strategy that could level up your trading game. Happy trading and stay disciplined.